Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm going to bring you to a topic that is very trickish, and many traders don't know that this is what has been making them to lose money. Okay, the topic is power of change of character slash retracement in Forex synthetic market. Okay, before I continue this video, there is a general rule of thumb, and the general rule of thumb is that if a candle or if two or more candles open and close in such a way that there is potential difference, or they will open and close at different positions at different heights, the market maintain that direction. The market maintain that direction for infinite period of time until there is a change of behavior or character. In other words, if price is breaking level in a given direction, no matter the time frame, it can be any time frame, it is going to continue breaking level in that direction until there is a change of character. That's the general rule of thumb. And what I teach when I first trade, one of the things I teach is I prepare your mind. I make sure that you understand the basic things, you understand the like the primary things, the major element on which trading is built. Okay, so before I continue, if you haven't subscribed to WinFS Trading YouTube channel, you should try your best to do that and turn on the bell notification so you get notified each time I upload a new content. So the topic we shall be discussing is power of change of character slash retracement in Forex synthetic market. I'm gonna read this, I'm gonna read the document, and then we go to MT5, both Forex and synthetic, so that you see how this become applicable. Okay, change of character happens when the swinging pattern of the market changes in M15 to H4 time frame. It can be any other time frame, but I choose this time frame because is what you are going to use to make entries. Okay, example, when market has changed from making higher high and higher low to making lower high and lower low, and vice versa. Okay, that's an example. This helps us to know when retracement has ended. Okay, it helps us to know when retracement has ended. If a retracement starts, one of the biggest problems is to know when the retracement will end. And because you don't know when the retracement will end, you will enter the market out of impatience or out of ignorance, and the retracement continues and hit your stop loss. Okay, and these issues is going to be addressed in this video. Okay, it is used to know when there is change in trend. Okay, you can use this idea to know when there is change in trend. You know, every part is a trend, but we have major and minor trend. So a retracement is a trend. An impulse is also a trend. The overall trend of the market is also a trend. Okay, so when a trend is changing, this topic is gonna help you to know. Okay, retracement is very trickish and can lead to change of trend. Most retracement lead to change of trend. They we see a bearish retracement, but you think that at a point it will change, and the impulse, which is the bullish event, you think that that bullish event is going to start, but unfortunately the retracement event continues. This topic gonna solve these problems. Okay, so retracement is very trickish and can lead to change of trend depending on the source swing. Depending on the source of that retracement, or the where the retracement started, depending on where it started, the liquidity of the zone, the liquidity of the source, it can, most time, it can continue, like it can become an impulse, it can continue, and you're trying to reverse it will be a problem. If market character is changed, if market character is changed, they continue in the new direction until there is another change in character for the direction to change. Okay, so that's why it is practically impossible to reverse market. You can enter a market that is heading to a given direction, but you cannot practically reverse a market. With, like, you cannot, the probability of reversing a market lies between 40 to 50%, meaning that it's very, very impractical to do. It's very, very impossible. Okay, and if you attack the reverse market, you are likely going to lose more money due to liquidity sweep, due to stop loss hunts, because you are not assured that this is the region on the chart where the market is ready to move in your direction. Okay, length of directions vary depending on strength or liquidity level of source swing or destination swing. So the direction, the path the market is creating, the length varies depending on the strength or the liquidity of the source swing. I'm going to show you this on the chart. Okay, when I mean a source swing, I mean if a retracement starts, it starts from somewhere. The strength of that place it starts will actually affect the length. Some retracement are shallow, some retracement are shallow while some are deep. So it depends on what is happening in the market. How change of character, like how to how to how to monitor, how to check, um or how to know change of character commencement, how to know when change of character when change of character is about to start, about to start. Okay, so one of the things here, number one, is break of last neckline near valley swing zone. Okay, the time frame here can be any time frame, but for you to actually succeed, you have to use M15 to 4 hours time frame. Okay, but if you are a swinger or long-term trader, basically you need daily to monthly time frame. Okay, so break of last neckline near valley swing zone, break of number two, break of last high or low in M15 to H4 plus. So when we say H4 plus, it includes daily to monthly. So it depends on the type of trader you are, because depending on if like there are types of traders. We have scalpers, we have day traders, and we have swinger or long-term trader. So the type of trader you are determines the time frame from which you are getting your entries. Okay, so all these things is being taught in my Forex and synthetic courses. We have separate Forex course, synthetic course, but if you want both of these courses, it can be combined together and you'll be taught, because synthetic is they have differences, they also have similarities. Okay, so it's because of faculty, a kind of, you want traders to be focused, so you have to be focused on one thing. So if you're learning Forex, you focus on Forex. If you're learning synthetic, you focus on synthetic. Okay, so that's why we separate the two courses, and that's by the way. Okay, so number two, I've said it. Let's read the swingers look for change of character at daily. Swingers That is long-term trader means swinger. Long-term trader here means swinger. So swingers should look for change of character at daily or weekly or monthly time frame. Should Why day traders should use H4 to M30, and the scalpers should use M30 to M5 or M1 to do what? To study the change of character, okay? So right now we are going to chart. This is just the theoretical part. We are going to practical on the chart and we will see how this thing work. Okay, right now markets move from one key level to another key level, but why it is moving, it does so with retracement and impulses. Okay, so you have to, we are not studying retracement as a broader term because the major reason why most traders use more money. And when you are studying market structures, it's not good to trade retracement. But when you notice that retracement have changed character, then you can trade. You can actually trade such. Okay. Um, the main topic here is change of character. Uh, Now that's the main thing. We need to study when character is changing. Okay. So let me make this thing more broader. Let's consider the monthly time frame. Let's consider the monthly time frame. But before I go to monthly time frame, let's consider the 30 minutes time frame. Why I want to consider the 30 minutes time frame is because you'll be able to appreciate the daily or the intermediary changes of characters, the multiple changes of character that happens in the market on daily basis. Okay, now when when you look on the screen, this is M30 time frame. When you look on the screen, what you need to understand first is the major trend in the market. Okay, you need to know the major trend. Just try to draw your trend line and see what the market is giving you. Okay, apart from drawing the trend line, study the turning point patterns, like the turning point in the market. What is the turning point doing? Okay, when you study that, that will tell you the overall direction of the market in that time frame. Okay, different time frame creates different market directions. Okay, so why I want to use 30 minutes time frame is that you will see multiple changes of character. Okay, so uh, based on the turning point, this market is making lower highs, lower highs, lower highs, lower highs, lower low, lower low. So it's going downwards, right? Now look at what happened here. Price ratio. Let's open this clearly so that you understand the meaning of change of character. Okay. Um, there is something I didn't put in a document. Okay. Let's go back to that document so that you learn about it. Now, I made mention of 1 and 2, like under how to know when change of character is about to start. I made mention break of last neckline, break of last high or low. Okay. Now another thing is candlesticks opening and closing pattern. Opening and closing pattern. Okay. Closing pattern. Then types of candlestick, type of candlestick, type of candlestick near reversible level, rever, reversible, reversible level. Okay, or zone, So these things are very very useful in this analysis. Okay, you see that if you look carefully, that we have a market that starts from here. It starts from this turning point, and what happened? First of all, you see that it go up like this. Let's study this thing critically. Let's study this critically. Okay, is it this market go up like this, drop, go up, drop, and then go up? Okay, so the character is that is uptrend. For that part is moving up. Okay, that's the character. Is making higher high, higher low. Now, what most traders do is that they will come and sell this market. Maybe they will sell it here. Now, if you initiate a sell, you are just selling. You initiate a sell at this price. Okay, you initiate a sell. Then when you initiate a sell, the market is downtrending. All right, so you want to follow the trend. So you initiate a sell. When you initiate a sell, this is a retracement. This retracement have not ended. You just initiated a sell when the retracement have not ended. What happened? This market will continue going up. It will continue going up by 3,000 pips plus. Remember, the white candles represent the bullish candle, while the black candle represent the bearish candle. Okay, so when markets move, they do so with turning points. Study the mode of those turning points, whether higher highs, higher lows, or lower highs, lower low. Study it. When you study it, try to know when it is changing character. Okay, when it stopped doing those stuff, those things it's doing before, you can see that price just break this price. Let's delete this. Price just break this thing here. Okay, what is a neckline? How do we know a neckline? A neckline is a resistance or support near the final swing zone. So this is the final swing. We take it to the final swing based on other technical tools, because this trend line we draw here shows us that if price reaches this trend line, it's going to drop. Okay, so we believe that this is going to be final point. So neckline exists near final swing zone or point. So you see that price break here and started dropping. Even though you cannot see other swinging clearly, because if you go to lower time frame like M15 or M5, you can see swingings inside here. But what happens is that you as a trader, you are waiting for price to create a retest, because it have changed character. Yes, it have changed character. What will make you to know that it have changed character is, number one, you see this swing. This we are considering those clear turning point. You see this swing. If you extend to the right, you see that it has been broken. Okay, another thing is, this is the last turning point. Price cannot go higher again, and then it start dropping. It start dropping, and if you now go to another time frame to understand what is happening, if you go to another time frame and you go there, you come back here, you notice that there are internal swinging. Okay, when you reduce the time frame, you can see other swinging that are invisible at higher time frame. Okay, so you can see that we have a swing here. There is a swing here. I'm just extending this to the right. There is a swing here. So price, there is also a swing here. You see that neckline? That neckline is actually a low. It is close to a low. So price came and break a low. This is a low here. Price break it. This is a sign of change of character. And then start dropping, break, break a high. This is a high, okay, and then that's the change of character. But the time frame of the time frame of your entry matters a lot. So I want to use M30 to enter the market. So you have to be consistent with your entry time frame to avoid making mistake. So you see that when it was dropping, it didn't retrace much until it creates that retracement. It creates that retracement. What make me to believe that there is a change of character in M30 time frame is what I like is the fact that this because the last swing, how price react to the last swing matter. You see, this is one of the last swing. This swing, okay, this is the like let's call it let's go back to the document so that I'll be able to flow well. Right now we talk about break of last high or low. It shouldn't be last high. It should be just remove the last, so it will now be break of a high or low that is closest 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 to the last high or low, last high or low. Okay, yes, we need these extreme points. Okay, so you see, if you go back, this is M30 time frame. You see that the last high, this is the last high, and then this is a high closest to the last high. So I want to see how price reacts to this high that is closest to the last high. You see that price came and break it. So what I want is a retest to where? It's not a retest to this this turning point that is closest to the last, but the best is to wait for a retest near the neckline. Yes, price is very trickish. Price would want to go to where you will not expect it. So it definitely need to come to this neckline that has been broken, and then you are going to enter the market, and your stop loss will be above like about the last swing, which is the high, which is the last high, and then you will be able to make some profit. Okay, be able to take trade at here and take your profit here because you have marked your structures. So you take the trade up to here and you take your profit, because you know that if it reaches here, it start going up again. Okay, so now when you are done with studying this, let's look at what happened. This is impulse because it's in the direction of the main trend, which is downwards. Now look at, how do we know that this retracement have started? How do we know? Not, it's not because of the lower trend line, but what happened here is that you need to know how market changes character. Okay, so we have a neckline here, so price break the neckline. Now this is the last low. This is the last low, the last swing point. Price cannot break it further, and then this is the neckline. Price break it, and you know there is no retest to this neckline. There is no retest to this neckline. But for we to confirm that the change of character have started, those conditions must be met. Not just one. Those conditions must be met, not just one. And the thing is, you shouldn't trade against trend. But what I'm trying to teach here is what really happens in the market. You shouldn't trade against trend. So this retracement, you use the idea of change of character to know when this retracement will end. That's the idea here. That's the main thing. So this is a retracement. So that is, it reaches a key level, and then a neckline was broken, and then what we need is to see how this direction is going to break the previous highs and low. Okay, so during the previous movement, you see that this is the last high, the last, because what you need is the last highs and low. So I'm going to change the colors here to brown. Okay, I'm going to change their colors to brown. Okay, so when I change the color to brown, so these are the last the last low and last high. You see that when price is moving, it break this last low and high, it break it. So that's change of character. When you know that a character have changed, you should know what you are doing. Okay, you don't need all the swings in the previous parts or direction to prove that character have changed. No, what you need is the neckline, which I have explained in the document, then the last high and yeah, the last high and low, how price react to it is very important in that time frame of analysis, that time frame of observation. How does price react to the last high and last low? So price break this high, what you need is to enter this trade if you're a retracement trader. But I don't think trading retracement makes sense. Okay, but if you can lower your risk because you know you are trading against the trend, then you should have read I'm sorry, you should have rode this market all the way from here and then till the key level, and then your stop loss, the best place to put your stop loss should be about the last swing, which is this one. Okay, now those that know obey the rule of trading, which says that you should trade in the direction of the trend. In how many ways can you know that this market have changed character? In how many ways can you know that retracement this retracement that move up from here to here, how do you know that it have changed character? First of all, the retracement must reach that key level of interest, which is this upper trend line. Now what you have to mark the last high and low. Simple, the last high and low as the market progresses. So this is a last, this is a low, this is the last low as I see it, is a last low, and this is the last high. Okay, the last high and low. Okay, yeah, the last high and low. So this is the last high, this is the last low. Okay, now want to see how price treat, how price behave here. So you extend them, you extend this. Okay, now look at what's really happening here. You extend it. Okay, look at what's really happening here. Market price range here, and then break. See that break? As a break, you want a V, like a retest that is in form of a V. You want price to come and retest the broken level. So you are basically, this is the neckline. Yeah, it's a neckline. So this is a neckline, but you remember neckline is close to the last point. Basically, I would say that the neckline will be somewhere here. Okay, so if a neckline is broken, it's not enough. You still need the last high and low to be broken. So you can see that we have a break here. Okay, and then a retest, and then you see that if you obey this break, you are going to be affected by this movement. Okay, you are going to be affected by this movement. That's why when you are entering market, you have to be looking at those neckline. You have to be looking at those neckline, and then you have to consider the last swing. So even if you enter here, you are going to put your stop loss about the last swing, and then even though the market went up, you couldn't hit your stop loss and then start going. So there are many ways to enter this market. Either you enter, you know, either you enter this market early and then you'll be affected by all this movement, or you enter lately and then you know there is a break here, and then You wait for a retest, then you enter here. Depending on the structure you are trading, the best stop loss placement should be about the last swing. Well, some people will decide to put it here, because it's also a swing. But what market respect is the last swing. So that is it. And this market went down. But this is not the type of stuff. This is not the type of stuff we trade. This is not the type of stuff we trade. Okay, this is not the type of stuff we trade in the VIP group. I'm just teaching you a phenomenon. We send you signal that have risk reward of 1:4, 1:5, 1:10, 1:20. Imagine putting $1 and you are taking it to $20. Especially boom and crash market, we are trying to optimize the risk reward even to 100, 1:100. Okay, so you really need to join our VIP to gain what to trade, or to trade the right signal, like to trade signals with high risk reward. Okay. But right now you see that this market has been in a downtrend in the M30 time frame. So anything that is against the downtrend should be a retracement. Okay, it should be a retracement. But before you start drawing conclusions, you have to mark out the trend. Just draw the trend line. You're supposed to know how to draw the trend line. You just connect 2 points and then extend it. You connect 2 swing points and then extend it. So this is a trend line. Okay. When you are drawing trend line, you should make it a channel. You get a parallel line to the previous line, and then you connect it to a turning point. So this market is downtrend, but when you notice something like this, whereby a trend line was broken, it's not just a trend line was broken. You just need to study the last highs and low, and then you monitor the rest event that will happen in the market. So this is the last low. This is the last low. This is the last low the price was able to reach, and this is the last. This is the last low, and this, you see, you are studying the last high and the last low from the like from the previous parts in the market. Okay, so this is the last low, and this is the last high from the left. This is the previous part. We are studying it from there. Okay, now what you want is to extend these levels. Yes, you need to extend these levels. Now when you extend these levels, they can become resistance and support in the future, and you can actually use it to make further analysis if you wish. Okay, but what we need is right now, how do we join this market? How do we continue with the direction? Okay, so you see that price reach here and drop and went up, and then instead of dropping, it break this high. But we can't believe that this is serious, because we still have a trend line. So it also break the trend line and retest the trend line. Now this thing means change of character. Okay, the market have changed character. It's no longer making lower lows and lower high. You see, when I'm studying this, I didn't consider this high and this low. When market is changing, it does so with the last low and high. Just open your ear and listen attentively. Okay, and then it have changed character. Changing character means it have created a new trend. Okay, so we now have a new trend. Just enter this market and ride this market to what? To any nearest supply or demand or resistance and support. So this should be your first take profit. Okay, that should be your first take profit. Okay, now somebody will say, but we are in a bear market, volatility 75 index have been selling, right? Now, when are we going to look for a sell again? See, you can only sell in this market. You see, we are just using M30 time frame. You can only sell in this market if you understand the higher time frame perspective. Okay, because the main direction is selling, is the bear market. So this market is a bear market. You can only look for selling, which is the main direction, only if you know what is happening in the higher time frame. Also, even when you trade retracement, because what we actually traded here is retracement. Okay, even when you trade retracement, you need to know what is happening in the higher time frame so that you know where you are taking your profit when you are trading that retracement. Okay, because even this level, you can take your profit here, because it was a very strong support that became a resistance. So if price move from here and reach here, that should be your first take profit. You should take your profit, then trade your SL to the entry. In case if it start dropping, then you will end up with break even. You will break even. Okay, but it didn't reach there. It keep shooting up. So if you know that this is the strongest key level at higher time frame, if this is the strongest key level at higher time frame, what you need is to wait for change of character for you to start selling. Okay, and that change of character will be like, let us assume that this will be the last low. Okay, let's change the colors to yellow. Okay, this will be the last low, and somewhere up there will be the last high. Somewhere up there will be the last high. So what we need is, let price break this. Let price break this last low and retest. You don't need to wait for it to break the trend line, because trend line most time creates false signal. Most time trend line lead to loss of opportunity. Okay, you just take this trade and take it back to either your first TP will be here. Okay, every level in the market has an interest. Like, every level in the market is where you can study, where you can either take profit or put your stop loss. Like, every level, price respects those levels. So it can reach here and it can also come here. So your take profit one, you put it here. Take profit two, you put it here, like that, depending on what you know at higher time frame. Okay, higher time frame analysis is necessary for this to work. Higher time frame analysis is necessary. Remember, I said I'm going to consider this topic. I'm going to consider this topic in the higher time frame. I will also consider forex market. So in the higher time frame, as a swinger, let's go to daily time frame as a swinger, as a long-term trader. Okay, if you look at this market as a long-term trader, you know that at least we can connect these two swing and the market is down trend. Trend lines are not perfect, so they can't just model their line of best fit. Okay, they can't just model market. I like using two trend line. I say this market is going down, right? Now, if a retracement occur, how do you continue the trend? How do you know when there is change of card? Or if a retracement starts, how do you know that a retracement has started? Because that retracement will be change of character. All retracement are change of character as well. Okay, so let's assume let's look at here in the daily time frame. You see, in this daily time frame we have a retracement. Market went up, start going up. how do we know that it is not a retracement? At least we have two candles, but one, like these two candles are at different level. So this one open at higher, so the candles are moving up. So that shows that it have changed character. Then how do we know that the character have, like, how do we know that there is a new change of character here? So the retracement ended here, and then we have this bearish candle, another candle open. You see, at this level you will now be using the opening and closing of candles at this higher time frames. So it closed there, this is the high, so it closed here. So what you want is, there is a change of character, because instead of candle closing higher, candles are closing lower. Now what you need is, you want these highs, at this high we need retracement, like you need a candles to tap into this high so that you will sell. Okay, yeah. Now let's consider the week. Let's consider the week. If you study this market in the weekly time frame, okay, if you come in the weekly time frame, okay, you will see that this market is pointing downwards. This is the trend line, okay, it's pointing downwards. But if we have a retracement, how do we know that the retracement have ended? So this is a retracement. What you need to mark, you just need to mark the high, the last high, the last low. Simple. Last high, last low, last high, last low. So this is a last high, this is a last low. Just wait for a break. You wait for a breakout, you wait for a breakout, you wait for a breakout. So here there is a breakout. Like this time around, we are looking at how candles are opening and closing. So this candle close, we need a solid body of the candle. Like we need the body of the candle to either close, I'm sorry, it should close. That is not like either, it should close outside the swing zone. So this candle close, then you can go to the lower time frame and look for a kind of retracement, and then you enter the market. So that's how character change. Look at another one. The market is retracing. You see, you need to mark key levels so that you know what you are studying. Okay, you need to mark key levels so that you know whether you are studying retracement or continuation, like the impulse. So this market is retracing and reaches here, and then instead of making higher movement, it drop. That is change of character. That means it's changing character. It drop. What you really need is for candle to retrace again in some time frame, maybe H4, to come to those broken levels. Okay, you see that you enter that market because it have changed character. You enter that market. Okay, you can see here retracement, and then it reaches here, and then instead of going up, start coming down. Then there is a retracement, and then the market push down. You see, these are very, very important. So let's try this on Forex market. Okay, you see, let's open good. Let's open good. Okay. Now this is good. Let's consider the weekly time frame. Gold is moving up. Gold is uptrend, right? So if a retracement happen, how do we know that is a change of character? Okay. Okay. Now look at there is a retracement here. Okay. There is a retracement here. Okay. That bearish candle is a retracement, and then we have this candle that this candle closes above this high, that's change of character. It closes above this high, this high here, that's change of character. That is telling you that this market have changed character, and then you can go to lower time frame and look for buy. Okay, now look at what is happening currently on gold. We have impulse, like this impulse movement, the movement in the direction of the main trend, which is buy, and then suddenly we have this big candle that close below the close of previous candle. That is a sign of change of character. Then all you need is some good retracement at lower time frame and you sell. So if you sold somewhere here, it will make sense. Okay, if you sold somewhere here, it will make sense, and then you should have taken your profit. So right now we have, you see this candle, that white candle, it closes above the close, it closes. Okay, this is where it closes. So we need at least two candles to see change of character. When we are studying change of character based in candles, we need at least two candles. So if this current candle closes below this one, this candle, it means that the market is still going downwards. Okay, but if it closes above this one, it means that it have changed character from going downwards to going upwards. It's something you need to study. Apart from doing other stuff in trading, you need to know this thing I'm talking about. This change of character is very necessary. Okay, the video is taking much time, but it's worth it. You know, if you are tired and so stressed about generating Forex signal, you have to join our VIP to generate it. Like, we generate it and relay it to you free of we generate it and relay it to you free of stress. Like, there is no stress. All you need is to join the VIP and start receiving signals. Okay, thank you and bye for now.